All right. Here we are, 16 minutes past 5 p.m. It's a lovely Monday, the 11th day of March, 2024. You're listening to Smooth 98.1 and the Smooth Drive. My name is Ayo and of course, Joy Ure is still here with me in the studio. And it's that time for us to get into the marketplace. Yes, this is where we're going to have a conversation about the latest developments in the markets, what is new, the numbers, and of course, we'll always have someone in the studio with us to break it all down and give us a better understanding of what is going on. And today we're going to be talking about trade and Nigeria's overdependence on crude oil. Now, this comes off the back of the latest figures from the Nigeria Bureau of Statistics, quarter four 2023 trade, trade records have come through. And of course, it's tilted heavily towards crude oil, unsurprisingly so. And joining us today to have this conversation to explain everything and give us a better understanding is Wale Olusi. He is a senior manager, deals and advisory at PwC. Very good evening to you, Wale. Great to have you on the marketplace.
Yeah, thanks a lot. Nice to be here.
Fantastic. And you can be a part of the conversation, as always, by sending your thoughts in, any questions you might have, any observations you might have, or anything you'd love to add to the conversation. You can do that on WhatsApp. The number is 0809 440 981, 0809 440 981. That is the WhatsApp number. So be a part of the conversation. We love it when you join in the discussion. Okie dokes. Let's get into the nitty-gritty of the conversation, Wale. Again and again, it's the same story with Nigeria's trade numbers, disproportionately tilted to crude oil. What do you make of this never-ending dynamic? Because it seems like it's a cycle over and over and over and over again.
Yeah, I mean, Nigeria remains a crude oil exporting country. And I think that's what I can make out of this. I think it is the same problem with many countries like Nigeria that are resource rich.
Okay.
You know, once you fall into that trap of depending or over depending on natural resources like crude oil, as the case of Nigeria, Venezuela, and a couple of countries like that, it's very difficult to get out of it. And the impact is a situation where other important sectors are neglected. Nigeria has huge arable land for agric. Okay. We have so many other natural resources, but beyond natural resources, Nigerians are very brilliant people. Our tech industry has developed astronomically between 2000 and now. Our service sector is also huge. We are a country with over 200 million people. Some people dispute that statistics, but the numbers are out there that Nigerians are a lot, in terms of numbers. So we also have huge human capital that we can export. But somehow, it's either as a people or as a nation or from a government point of view, there's been little or no deliberate effort to figure out a way to sit down as a country and say, apart from crude oil, or this plenty money we are making out of crude oil, how do we deploy it, develop the other sectors of the economy, and then how do we export these services? Nigeria is the largest producer of cassava, for example, from the agricultural point of view, cassava and yam tubers. Who are those that need these products across the world that we can export it to? So we've not sat down to develop master plan, not to be able to meet our local consumption, but to become, exporter. And if you go down the trade statistics, there's a very interesting aspect of it. Nigeria exports quite a decent amount of goods to the rest of Africa, but we should be doing a lot, much more than that. There's a lot of things that we produce very cheaply in Nigeria that is quite expensive in so many of these African countries. We should be the China for Africa because of our population. and the fact that things are cheap here because labor is cheap. To a large extent, cost of capital is relatively cheap because of everything CBN has done. So we should actually be able to deploy these factors of production to produce massively. With our manpower, we shouldn't be talking about unemployment in Nigeria if we are thinking exports. But I'll stop there because I know you have more questions.
That is right. Indeed, we do. But before we go into more questions for everyone out there listening to us right now, you can also join us on the live stream because we are streaming live on YouTube at Smooth 91 FM Lagos. So you can join the live stream if you so please. All right, let's get on with the conversation.
All right. So why I know that there are non-oil exports, and it has actually amounted to 8.7% of the total exports that we actually are exporting, right? But in your view, are the implications, or what are the implications for this being such a low number? Because some people have actually said that the numbers aren't adding up.
Yeah, I mean, the low number is almost laughable for non-oil sector because even with this crude oil that we've talked so much about,
yeah,
all we exported or produced is about 1.5 or thereabout million barrels.
Not even doing that properly.
We are not even doing that properly. Somebody said we are not even taking care of the chicken that is laying the golden egg. We have a country that has the capacity to produce 2 million or maybe 2.3 million barrels of crude oil. That number has been there since forever. By now, Nigeria should be talking about producing maybe ×2 of that capacity. But even that investment we've not made, or the right policies we've not made. Now, if you look at the fact that the actual production that we should be producing is lower, then even the non-oil sector is still not up to scratch. So everything comes back to, what I've said before, that we haven't deployed the excess earnings from that crude oil to other sector to be able to develop it up to the extent where we can now export non-oil items. In terms of implication, what that means is that apart from the crude oil that we are exporting, we don't produce anything. We're a consuming nation. We import everything. We import everything. That's why we have nothing to export in terms of non-oil. So from machineries to food items to raw materials, those are maybe some agricultural products. In the West African sub-region, Nigeria, Ghana, and Cote d'Ivoire are the largest producers of cocoa. But if you talk about cocoa today, it's only Ghana and Cote d'Ivoire that comes into that conversation. But Nigeria used to be a huge cocoa exporting country. What has happened to all our cocoa plantation? Nothing. If you talk about oil palm, it's the same thing. The story of Nigeria, Malaysia, and Indonesia will come. What has happened to that today? Nothing. So that's why the unemployment level is high. That is why today we are talking about inflation of about 30% and potential food insecurity, because we are not even producing all this. And then always the question of security concerns and what the farmers are able to do and not able to do will also come in. But even before that, even before all the insecurity, we have not made deliberate efforts to produce these items that we have capacity to produce at large. We are very myopic with the way we have handled investment in the agric and industrial sector. Hence, we are not producing for global consumption. We are producing those items maybe for subsistence to a large extent, and then whatever is left, or maybe a few Singaporean companies such as Polams, and some Indians and Chinese are the ones tapping it and then exporting it. If you go into the details of this non-oil items that are being exported, you will notice that most of them are not even Nigerian companies.
Sure. So with that I just wanted to find out, is it that we've not actually figured out how we want to go about it? I know you've made mention that, oh, Nigeria should be the China of Africa, but bearing that in mind, how can we even get to that point? Seeing that before you are able to export anything, there are checks that are put in place. And if you do not pass these checks, even if what you have is of the best quality, without approval or without you getting to that point, it will not be what you can actually export.
Yeah, so countries don't just develop, by mistake or by folding their hands.
Okay.
I think one thing we've not done well is to have a development plan and implement it properly. Or maybe we've not been visionary enough as a country. We have a huge population and we are not even talking about how to sustain them. So the problem with Nigeria most of the time starts from the fact that as a country, first of all, we are not serious. Then second off, we don't know where we are going as a country. We don't know what we want to do because this thing is just like an individual that enters maybe a university, for example. That's the simplest example I can use. At year one, you want to decide for yourself, do you want to finish with a first class or second class? How do you want this thing to end? So as a country, I'm not sure, it doesn't appear to me like we've sat down and say, in 2050 or in 2000, that's maybe about 80 years from now. But if I step back to 2000 as a country, we've not sat down to say, okay, 100 years from now, where do we want to be as a country? And we say, okay, this population will be this X amount. Should we check that population growth or allow it to continue growing like that? Now, this is the plan. Now,
Hi, Wale. Are you still there?
How do you? Yes, I'm still here. Can you hear me now?
Yes.
All right. Yeah, we can. Go ahead. Go ahead.
Please confirm you can hear me now.
Yes,
Yes,
we
we can. Go ahead.
So how do you? So all these people, what are they going to be?
Looks like we're having a bit of a network issues here. Wale is going in and out, but we hope to get him back as soon as possible so we can continue this conversation that we're having this evening right here on the marketplace on Smooth 98.1. And we're still talking about trade numbers and, of course, Nigeria's overdependence on crude oil. Wale said something a little earlier on when he talked about this overdependence on crude oil and crude oil amounting or showing as the largest in terms of trade numbers. And I was actually going to ask him the question. Hopefully we can get him back on as soon as possible. That looking at where the world is going right now, we have a lot of talk about fossil fuels being pushed to one side, electric cars being the future, and so on and so forth. Now, I don't know
I've never even
how
tapped into that.
how feasible it's going to be for us to have a situation where we focus only on the electric cars and fossil fuels are not in demand, because fossil fuels do a lot, not just for petrol. Fossil fuels do a lot in terms of the derivatives, your diesel, jet A1 fuel, and so on and so on and so forth. So if the world is sort of transitioning to that direction, isn't this overdependence on crude oil going to be like a shot in the foot? Now let's paint a picture where that oil is not as in demand as it used to be for whatever reason. Looking at what we're looking at, what then happens? Do you then say, oh, the crude oil is not selling anymore? All right, let's go and see what else we can sell in order to bring in foreign investment.
By that time, might be too late.
Exactly. Hopefully, we'll get Wale back as soon as possible to answer that question, and of course, we'll continue the conversation as well. Meanwhile, stick around because the marketplace right here on Smooth 98.1 will continue after this quick break. Don't go anywhere. Let's walk.
It's not that one. I thought it was.
What's we go do, guys?
Why? That's what becomes back.
We had his number. Something.
Yeah.
We had.
Hi, Wale. Welcome back.
Thank you. Apologies.
No, it's fine. We know how network can actually be.
Yeah. Okay. I think it's going to be stable now. I was using my phone before.
Oh, okay.
Now it's a more stable network on my laptop. Okay. So I don't know. I was talking about.
We're going to go back on now. We're on a short break. We're going back on like right in.
All right. No problem. Let me know.
All right, welcome back to the second half of the marketplace right here on Smooth 98.1, your love music, love live station, 32 minutes past 5 p.m. This is the Smooth Drive with Joy and Ayo, and we have our very special guest back after that brief technical glitch in the person of Wale Olusi. He's the senior manager, deals and advisory at PwC, and he's joining us this evening to talk about trade and Nigeria's overdependence on crude oil. Already begun the conversation, and he's already explaining a couple of things to us. And you can be a part of the conversation as well by sending your thoughts in on WhatsApp. Any questions you might have, anything you'd love to add to the conversation, because we love it when you join in. The WhatsApp number is 0809 440 981. And you can join us on YouTube because we're streaming live right there at Smooth 981 FM Lagos. Let me go to WhatsApp and take a message before we get back into the conversation. Angel says Ghana accounts for most of global yam exports. Guess what? Most of the yams exported by Ghana come from Nigeria. We simply don't have the right structures in place to enable us participate, and I believe it's deliberate because there are people benefiting from the inefficiency. Wale, what do you say to that?
Hi, Wale.
Wale, you're muted.
Apologies. I thought I was.
It happens.
Okay,
we
it's
understand.
fine. Okay, so I believe we are talking about the how Nigeria can actually plan towards all these things. Am I correct?
That's right. There was a message in from Angel. I don't know if you heard when I read the message.
No, I didn't.
Okay, let me take it again. She says Ghana accounts for most of global yam exports. But guess what? Most of the yam exported by Ghana comes from Nigeria.
Absolutely.
We simply don't have the right structures in place to enable us participate. And I believe it's deliberate because there are people benefiting from the inefficiency.
Yeah, so there was a time we have a minister of agriculture, I've forgotten his name, something Adamu, during Buhari's first tenure in between 2015 and 2018 or so. He tried to launch this yam export thing. And you know what the problem was then? We couldn't even do it right. We couldn't get the specifications right. We couldn't meet the required standards, for many of the countries we want to target.
Right.
At times, some of these countries that want to import those things are probably more comfortable importing it from Ghana. So between Nigeria and Ghana, these goods find their way there and then they are exported from Ghana. So again, it comes to the fact that we are not serious. We need to be deliberate. If you want to achieve something, you ask yourself, what do you need to get that thing achieved? You want to be in the export business, then you must meet the export criteria. You must fix your ports. Look at the kind of gridlock in our ports.
Indeed.
To even take out goods out of here, we don't appear to look like a serious country that wants to drive exports, that want to grow our economy via exports, that want to get people employed, that want to develop industries. So those are the issues without, overdwelling on it.
Right. All right. Okay. So Wale, let's continue on the current trajectory, the trajectory we're on before that message came in. Now, manufactured goods actually amounted to just about 2.2% of total exports. What exactly is holding the Nigerian manufacturing sector back? I mean, there are some obvious ones, but I'd love to hear from you. Now, meanwhile, the largest category of imports in 2023 was machinery and transport equipment. About 12 trillion naira was spent. Now, what do we need to do, or what needs to happen for Nigeria to begin to manufacture machinery and transport equipment? That's a
Thank you.
two-in-one for you.
Yeah. So what do we manufacture in Nigeria? Very few things, really. When countries grow, they grow from agricultural to manufacturing, then to services. That's like the normal, transition for economies. But if you look at the breakdown of the Nigerian economy today, 50% of that economy is services. Industries drive about maybe 20 to less than that percent, and the rest is agriculture. So we don't really manufacture a lot of things. Many of the machineries that are imported are either for road construction, to set up factories, to do all sorts of other things. If you go into the breakdown of that, how many trillion did you call it again? Machineries.
12 trillion.
12 trillion machineries that have been imported. They are probably going into maybe crude oil exploration, maybe some refinery, cement manufacturing, because that's a huge manufacturing sector in Nigeria, cement.
Indeed.
And there's some investors that are setting up plants for food and beverages, or maybe replacement cost for many of their machineries that are being replaced. But many of what they produce are consumed locally and not exported. So those manufacturing activities are not done at a scale where, they are exported. And we actually still consume a lot of manufactured commodities here, from toothpick to, what have you, is imported here. So those are the reason why we've not developed our manufacturing sector in a way that, it targets export. And like I said, we can export many of these things to the rest of Africa if we cannot go to the rest of the world. So we actually need to figure out a way to produce this thing at a much, much cheaper rate and sell it. See, I was in Kinshasa a few weeks ago. Things are extremely expensive in that country. I couldn't buy a lot of things because they actually spend dollars on the streets. So now if I need to come,
Indeed.
Oh, wow.
The economy is dollarized. So if I need to spend my naira that I converted to dollar that I took into that market there, then I won't be able to survive. But in Nigeria, some of things I buy here for maybe $1 or $2 goes for $8 there. As at then, I think cement is selling here for about 6,000 to 5,000 naira. I hear that in Kinshasa, it goes for between $8 to $10. And if you go into the interland of DRC, it goes as high as $50 because of the infrastructure.
For a bag of cement.
Yeah,
that's
about 50 kg. So those are economies we can serve. There's a lot of development that needs to go there. Those are markets we can serve. And it's the same thing. Those that went to Abidjan for the AFCON, they will tell you stories. Many of those things, if we can figure out a way to produce this cheaply, Nigeria can actually lead those manufacturing products and sell to the rest of Africa. It's a win-win for Africa if Nigeria can actually pull its weight in this continent.
Now, I'm hoping that we can actually do that. And with regards to trade, I know that when it comes to that, Nigeria's trading partners, no African country is in the top 3, either for exports or imports. However, I want to know, what do you make of the low trade numbers, especially with other African nations when it comes to and bear in mind, yes, we have the Africa Continental Free Trade Agreement also in the pipeline as well. So how do we now factor all this in and make sure that at the end of the day, we're not just selling to Europe and the rest of the world, but we're also seeing how Africa as well, other countries within Africa are also able to tap into it as well?
Yeah, thank you. So that's an important question and it's also interesting. And there are two ways to look at it from a Nigeria to rest of Africa point of view. Number one, we've said it here already. Nigeria's export is overwhelmed by crude oil.
Mm-hmm.
So if we are going to be producing crude oil for exports and we want to target Africa, which African country is going to need crude oil? Many of them don't even have refineries like Nigeria. Talk less of asking for crude oil that they want to refine. So expectedly, if you produce crude oil, it will go to countries where they have huge refineries, where they want to refine all those crude oil so that they can resell it to you as refined crude oil. So expectedly to go to India, to go to Belgium, to go to the developed countries of this world and not to Africa, because many of these African countries Nigeria is probably better off than many of them. The second way to look at it is, let's assume Nigeria is even able to produce what they need. Trading within and among African countries is extremely difficult as well. I just mentioned, my trip to Kinshasa recently. I spent about $2,000 for the trip. That's expensive for a 3 hours journey down the road, actually. There are no trains that connect the regions together. The roads are probably bad. The border between Nigeria and Benin is something else. You can't get anything through. The freedom of movement of goods and humans is actually not very free. There are 54 countries in Africa with almost each of them trading in different currencies with different visas. I had to pay for visa, to get into DRC. So all of those things make trade difficult.
Okay.
So expectedly, trade will be, difficult because the environment to make business very easy and trade very easy among those countries is not yet there. Many of the countries are still struggling with their own domestic problem rather than thinking about connecting each other in a way that trade can be facilitated. So those are the issues. One, we are not producing what we need largely amongst ourselves. And two, we are not actually that connected, even though when people speak about Nigeria, Ghana, you think they are next door neighbors. You forget that there are two countries in between us.
Before
So
getting
there's
to
also
Ghana,
language
correct.
barrier. Yeah.
Okay.
All right. Well said. Well said. Okay. Let's quickly talk about exchange rates, Wale. Now, Goldman Sachs says they see the naira appreciating to about 8,200 naira to the dollar over the next 12 months. Now, what do you think of this forecast? I mean, possible, impossible?
I think I'm excited about this one because it's a piece of good news.
Okay.
And I think it's possible because at 1.6 or whatever the naira is now, I think it's actually, I think it's ridiculous. I don't think anything fundamental has moved the exchange rate from where it was to where it is today. I don't know what has happened. And, I've been a research analyst for quite a while before I transitioned into deals advisory. So I know the story of Nigeria exchange rate. Every time there's a major depreciation, there's a story to back it up. If you go to between 2013 and 2015, there was the oil market crisis and the exit of Governor Sanusi, Lamido Sanusi from the CBN governor, and then the entrance of Emefiele, and then it came to 200. And then Emefiele came in, and then there was recession. And then, there was the currency crisis, and there was that huge divergence. And then somehow we introduced the I and E window, and then there was stability at around 360. And then it was 360 until COVID struck. And then with COVID, things basically just went crazy. And then ultimately we got to a point where official rate was about 460, and then the parallel market was around 700. Between then, which is last year, when President Bola Ahmed Tinubu came in, and the new central bank governor came in, and now nothing fundamental from a macroeconomic point of view have happened, apart from the government trying to harmonize the currency. When you try to harmonize currency and you try to put things in order, typically there should be some volatility and then stability will come, and then the naira or the exchange rate will find its level. What we've seen so far is the price being driven up to 1,106 now. The question is, what is Goldman Sachs looking at? I think what they are saying is, compared to where we are coming from the time of Governor Emefiele to Governor Yemi Cardoso now, policy framework within the central bank is coming back to normal. We're coming from a situation where inflation is about 20 to 30%, but interest rate is about 11% or maybe less than that, maybe 15, 16%. So there was a dislocation in the economy whereby it makes more sense to save in dollars than to save in naira. Why? Because if you save in naira, you are literally losing money. The real interest rate is negative. Why? Because the central bank was literally practicing what you call unorthodox monetary policy. Before then, everybody was buying treasury bills because the yield was interesting. Even foreigners were coming to buy it, and it was propping up the, currency. But between, what happened during the COVID period and last year, what we're having is a situation where the only reasonable thing to do is to keep your dollar and keep it tight, and all your naira savings, you convert it to dollar. That's the only way to hedge. But now with what Cardoso is doing, interest rate is now in the region of 20%. It means when you want to invest and you think about naira and you think about at least 20% yield, you have something to think about. And the speculative move or drive, or how will I put it now? That's fear of putting it in dollar is reduced. So with orthodox monetary policy, and we need to actually bring interest rates to a level where real interest rate, that is the difference between inflation and interest rate, is positive. That way, people can invest in treasury bills, in bonds, and they know that they are not losing their money. And then the need to speculate on dollar will start reducing. That round-tripping movement will reduce. And I think that's what Goldman Sachs is doing. So I think the CBN should sustain what they are doing. They should try to bring down inflation. They should try to arrest the amount of liquidity in the system. They should do everything they can to restore that traditional monetary policy. And I think fair rates for the naira to dollar exchange rate is probably lower than 1-2 that Goldman is saying, but you would never know. But I also hear that more investments are coming in because Nigeria is now cheap. Singapore, UK, US are here is leading the charge, and that's reasonable. Why? Because now what you want to buy for $3 before, you can now buy it for maybe half that price at 1.6. So that should attract more investment typically. And the CBN should try and do that. If that is sustained, I think we should see some appreciation, and the naira should find its level at maybe 1 to maybe lower than that.
Lower than that.
Never know until you keep doing the right thing and you sustain it.
Yeah. All right. Hopefully that is what's going to happen eventually.
We're all praying for this, man. We're all praying for it.
Oh, yes, we are. We'll wrap up the conversation with a couple of messages. Angel says, Malaysia accounts for the highest exporter of palm oil. Guess where they got their first seedlings from? Nigeria. Well, that story has been disputed back and forth. Sort out the power sector and Nigeria will become a manufacturing country, exporting products to the world. And then she says, so is the African Continental Free Trade Area futuristic? Is it currently unattainable on account of infrastructure deficit? I believe yes, Angel. David says, the task of building non-oil sector businesses is on the people, not just the government. Nigerians don't invest, build, grow, and sustain the non-oil sector businesses. People want big money and they want it immediately, so they focus on oil. That's David from Festac. Well, David, I mean, if the right environment was here for business to thrive, I think that businesses will be able to thrive and, of course, grow right here in Nigeria. Right, we've come to the end of the marketplace. Thank you so much to our very special guest in the person of Wale Olusi, the Senior Manager, Deals and Advisory at PwC. Thank you so much, Wale, for joining us this evening.
Thanks a lot. Pleasure to be here.
All right. Have yourself a great evening and a great week ahead.
You too. Bye.
All right. Thank you for being a part of the marketplace. We do this every Monday at 5:15 p.m. Meanwhile, stick around because the Smooth Drive right here on Smooth 98.1 will continue. More great music to come. Stay with us. And it's a wrap.